Hello everyone, this is Chris from GBC Forex Academy. I'd given a trade forecast for USD CAD short yesterday. It sold but it did sweep Tuesday's low before selling, but swept Tuesday's high. When I give trade forecasts, it's never a means to brag on how much I understand the market, but I use it to explain the strategic move of the market. On today's AUD USD forecast, I will use this to explain internal liquidity and external liquidity move and relate it with lower time frame and higher time frame analysis on my next video. To keep things simple, an internal liquidity is a zone that bought or sold earlier, and this zone is within structure. External liquidity is a zone that bought or sold earlier, and this very zone is outside structure. While internal liquidity is within structure and external liquidity is outside structure. So what do I mean? Look at this very chart over here. You observe that there was a move down to the downside, upside, and downside. This very one that produces very external liquidity is called an internal liquidity because it is within structure and moves from this external now move to the internal. Then took out this very low over here to form external. And the all of these are all within the all of these are all internal liquidity. And of course came down from another external liquidity. Internal liquidity seeks to take out external liquidity, and the external liquidity seeks to take out internal liquidity. Hence, this price move is what we call the price cycle of the market. Okay, for a bearish market, what usually happens is that the internal liquidity seeks to take out external liquidity, which now forms a lower low. While for a bullish market, the internal liquidity seeks to take the external liquidity, which forms a higher high. So this is a bearish setup. Why is it a bearish setup? Because it is actually going down. Look at what happens. We now have a push to the downside, upside. This is now internal. Breaks this very low here, forms a lower low, moves up again, forms internal liquidity, comes down again. On coming down, is forming a lower low. So internal liquidity for the bearish market intends the seeks to form lower lows. While for bullish market, there's a move up to the upside, downside, upside, internal liquidity, forms external liquidity higher high, comes down, internal liquidity goes up, forms another higher high. So the internal liquidity of a bullish market seeks to form a higher high. So let's move into the chart for AUD USD because that is the main bone of contention today. Okay, so what am I expecting price to do? Conventional, what am I expecting price to do? Now, this is a low. This now forms an internal liquidity, and over here forms a lower low. Why do I say forms a lower low? Let's get this now and draw this down. The downside. Okay. We can clearly see what happened was that price actually came to the downside, formed an internal liquidity, took out this previous low that was here. And on taking out this previous low that is here, formed an external liquidity. But now there is an internal liquidity over here. There's an internal liquidity over here. So what am I anticipating that price should most likely do? Doesn't mean that if we anticipate that price will do that, price would actually do that. The market is the market and it will do whatever it wants to do. So what am I anticipating that the price will do? I'm anticipating that the price will go take out this internal liquidity over here because there's an imbalance here, and of course come and form another external liquidity. So I'm not using AUD USD to explain internal liquidity and external liquidity. On my next video, I will relate this with lower time frame analysis and higher time frame analysis. Please, if you like this very video, subscribe. If you like this very video, like and comment. And like I always say, and I will say again, let us grow together.